Hello, everybody. Welcome to the latest edition of the La Piedra podcast. I'm Sean Woolley, Managing Director of Cloud9 Spain. We're a real estate company based in the Costa del Sol. And with me, as always, I have Mark Stucklin from Spanish Property Insight. Mark is the guy who has all the data. So he is the man to go to find out what's been happening in the market, where the market is positioned at the moment, and when he gets his crystal ball out, maybe he can see into the future and give us a little handle on where he sees the market heading. So we look at this from two angles, really. We're helping people who are maybe considering buying or selling a property in Spain to make an informed decision based on fact, not speculation. And also we're coming at it from two different angles. Mark from the data angle, and I'm from the sort of boots on the ground, what I sense is happening, albeit I'm in a little bit of a micro market here in Marbella. Mark, we're going to talk today about mortgages, which is a topic, I guess, that many, if not most, buying clients are going to be interested in. You know, nobody wants to use their own money if they can possibly get away with it to buy a property. Although we do get a lot of cash buyers, but let's talk about where we are. I'll start by just giving a little bit of kind of history on mortgages in 2022. We're recording this just at the end of April, beginning of May. So in 2022, there was an increase in mortgages written in the whole of Spain of 11.2% as opposed to the year before. So there were 463,000 mortgages granted in Spain. That's over 100,000 more mortgages granted last year than before the pandemic in 2019. And for those who might be scaremongering, this is a far cry from the whopping 1.3 million mortgages written at the peak in 2006, just before the bubble went pop. So there's no repeat of that. Interestingly, 6.8% of mortgages in 2022 were to non-residents. The leading foreign markets, there's two markets within the non-resident market. There's the people who live here, people like Romania, Morocco, but apart from them, the leading foreign markets were the UK, Germany, France, Netherlands, Sweden, Ukraine, and Poland. The Belgians were lower than expected. In fact, more mortgages were granted to Venezuelans than to Belgians, which is an interesting little throwaway stat. But interestingly, I had a chat with my Belgian colleague, and she said the Belgians just don't do mortgages. You know, she said it's just a not in their thinking most of the time. In terms of getting this down, the average loan size to non-residents was 171,000. So that was the average mortgage, although that's likely to be higher again for the kind of true overseas buyers rather than the people who are already living here. And the average loan size to residents was 143,000. So these are, yeah, you can kind of work this out, fairly typical. Interestingly, the average mortgage in Andalusia as a whole was just under 200,000 euros, whereas in Mallorca, that shot up to 370,000. So although there were far fewer mortgages granted in the Balearics as opposed to Andalusia, the mortgage value tended to be much higher. The Swedish buyers were the ones who grabbed the most money. They had an average mortgage of 340,000. The USA buyers were just behind that at 335, I assume, because that helped them get over the golden visa threshold. And the UK buyer average mortgage was falling back to 230,000 euros. So that's just some kind of throwaway figures, really, on last year's mortgages and who was using them, who wasn't. Mark, what's been happening since then?
Yeah, okay, so the very latest data. So that was, I think you were quoting from the registrars.
Yes.
And now we'll look at the notaries, because the registrars, there's a longer process between purchase and inscription in the land registry. It takes about a month or up to 3. So there's a lag between the registrars' data, the notaries and the registrars. And they're kind of better at different things. You get more detail from the registrars on things like mortgage lending per nationality, but you get more detail from the notaries on things like purchase per region and spending per nationality. So you've got to use them both. Anyway, the latest data is from the notaries, and this is just mortgage data. It's not doesn't break down by nationality. They don't do that on their monthly data. They only do this in a half-yearly report. Anyway, so we know that mortgage volumes, new mortgage lending volumes, were down 24% in February. That's the 6th consecutive monthly decline. It's a clear downward trend.
Is that 24% year on year, or is that from January to February?
No, year on year. So okay. This February compared to February last year.
Okay.
And that annualized decline, this sort of year on year, has been going down for 6 months. This is inevitable. I mean, we all saw there was an amazing recovery after the pandemic, and a post-pandemic boom went on, but they can't go on forever. You know, there's not. They're unsustainable. At some point, they have to cool down, and sales and mortgage rates are all still quite near all-time highs, but they're just not as growing compared to last year as fast as they were. So that's encouraging, because you can't carry on growing at that kind of breakneck speed forever. Mm-hmm. And so what we needed was a type of a slowdown and a consolidation, but what you don't want is a downturn or recession. So we'll have to see where we're going. But so far, the mortgage lending is down 24% this February compared to last February, and I think in Andalusia it was down 25%. So in pretty much all of the latest mortgage data, Andalusia, which is your territory, is reflecting the national average. Mm-hmm. In values, they were down. So this is the average loan value of a new mortgage. They were down 7% in February to 144,000, and 7% in Andalusia. Although, funnily enough, in the Valencian region, it was up 9%. Valencian region seems to be the region that's kind of bucking the trends to a certain extent, but anyway. And that was so in terms of values, it's the second consecutive months of declining values since the 2020, since the early days of the pandemic. Euribor is the base rate that's typically used in most Spanish mortgages to calculate monthly repayments. And Euribor in April, so the average for Euribor in April we're just 2nd of May now, was 3.757, which is up 17,791%. Don't get alarmed by that large increase. People thinking my mortgage payments have increased 17,000. No, it's because back in February 2022, mortgage Euribor was 0.021%. It was almost zero, and now it's 3.757. It's a massive increase, but only because the base is so insignificant. But what it does mean is that the average mortgage of, let's say, 120,000 euros at 20 years is going to be up about 200 euros a month in repayments. So that, it is part of the rising cost of living story. And people have to factor that in, and everyone each individual making their decisions in their own best interest. That's where you see things like it's helping to bring down, it's reducing mortgage lending. And I think just one last thing before we get onto, what does it mean? How are you seeing it on the ground? What are your clients doing? How's it affecting the market? Just to note that the new mortgages, you can either take a fixed mortgage or a variable mortgage, and it used to be variable rate mortgages were much more popular than fixed rate mortgages, but that hasn't been the case for a few years now. And in February, fixed rate mortgages, I've got mortgages at 30 years at a fixed rate. You can get them for lower, smaller, shorter periods of time, but if you're going to take a mortgage, it's good to have, if possible, the longest period of time. So you just have, my entire mortgage lifespan is fixed, and I don't have any uncertainty on what they call interest rate risk. Right? It's completely visible to me from now through to the end of the mortgage. And so the fixed rates were 65.7% of all new mortgages in February, and variables were 34.3%. So it's sort of 65, 35 in favor of fixed rates and their fixed rate mortgage, which is good because they bring a lot of stability to the market, because the borrowers they know what they're going to be paying today and in 10 years, or whatever the fixed rate seems to go for. And I don't know, maybe we'll get to this, but in the UK, there seem to be fixed rates that are done for a couple of years, 3 years, and then they turn to variable. So you get the benefit of maybe they're just cheaper. It looks like a better deal for you today than later, but I would always go for the longest fixed period time possible. Anyway, and finally, the average mortgage rates for fixed mortgages in February were, so this is the average interest rate for a new mortgage was 2.96%, and for a variable was 2.7%. So variables are always should be cheaper because you're getting you're taking a risk. You're exposed to into a interest rate risk, and so that's why you get a cheaper rate in the short term. But of course, if rates go up above what you could have got on the fixed rate, then you're out of the money. The spread was only 26 basis points, which is tiny. I mean, you'd be insane not to take a fixed rate at that such a small spread between the cost of a variable and a fixed rate mortgage. So that's the overall picture, Sean. What's going on with your clients? I mean, what the most interesting is how does this translate into people buying and financing their purchases?
You know, it's really interesting, and I'm a little bit jealous of you, Mark, because I'm on a variable rate mortgage, and my mortgage rate has just shot up literally yesterday, and yeah, I was kind of scrabbling around for the terms and conditions, and of course, yeah, there it is. So I had a little period of, an initial grace period on a fixed rate, and then it just.
In Spain, was that hit your mortgage in Spain? How long was your fixed period?
I think it was just a year or 18 months, so it wasn't long at all. And of course, at the time I took it, interest rates were exceptionally low, and everyone thought, they're never going to rise, and everyone's so, yeah. I get it, and you're right what you say. That's if the variable is 2.7 and the fixed is 3.7, then there's a decision to make. But when they're so closely aligned, where you're 2.7 as opposed to 2.96, you're absolutely right. For that extra little bit, you might as well just take a hit and be happy with what you've got.
Exactly.
It's very interesting, and it's a debate that I'm sure every client has with us certainly, and also with their mortgage broker or their bank as to which way to head with it. But let me just say,
these are the figures published by the notaries. You might not get this kind of a choice in the real world. This is like the averages of 20,000 new mortgages, and there's all sorts of variables. Reasons why people. I don't think everyone's going to go to the bank and get offered, oh yeah, you can borrow for 30 years. It depends on your age, depends on your credit profile, depends a whole range of things. But nevertheless, that's the overall picture.
Yeah, it's interesting because obviously, like we've always said, within a market like this mortgage market, there's mini markets, if you like, and it depends if you're a resident or a non-resident, because residents tend to get better, longer term deals. But, also banks are reluctant to lend to people from certain countries or with certain currencies. So there's a whole load of little things going on there in the in the whole of the market. I think what's interesting for us is that we've just had our first quarter, the first 4 months of the year, and it's been on paper, it's been the best 4 months, the best first 4 months of the year that we've ever had. Better than 2021, which was our best year ever. So we are, if things keep going as they have done for the first 4 months into the rest of the year, then we should have pretty close to our best year ever. So we're not noticing the effect of that a little, as much as maybe I thought we would. I'm guessing that's because we are operating in a bit of a micro market here in Marbella. It's a little bit of a bubble, because it attracts probably a disproportionate amount of wealth. And obviously, the wealthier you are, the less you tend to rely on finance because you have oodles of cash. That's supposed to be how it works.
Well, you just have more options, don't you? It's just easier.
You do, and there's I'm sure there's particularly at the really high end of the market, there's people who are getting mortgages from private banks and stuff like that, which of course probably wouldn't be, or would they be reported? I don't know. Would they be reported at the notary level? You'd expect so, wouldn't you?
Yeah, I think so. I mean, you'd want the bank would want to be on the deeds as the
charge holder. Yeah. I mean, I think that's a very, very tiny piece of the market anyway. But we're not noticing any distress in the market. What we're noticing, as has always been the case with us, because our average sale here on the Costa del Sol is probably between 800,000 and $1 million. So we do stuff pretty much from 500,000 upwards. And so we've got a split, probably 50-50 split of people who buy with cash and people who need a mortgage. And that's always been the case with us. So we're not totally reliant on the mortgage market. Like I said, the Belgians don't tend to go for mortgages unless they really need them. So again, it's people's different cultures, how they want to use their own money, and whether they believe that
The
borrowing
Germans
money
are not
value.
keen, and Germans and Swiss are not keen on mortgages either.
No.
I mean, it seems, I think that the latest, they're getting more less averse to mortgage financing over the years. But in Germany, they're like cash buyers, and they prefer cash.
Yeah, and the interesting thing is as well that obviously we mentioned Andalusia being my patch. It's not really. There's again lots of different markets going on within the whole Andalusia region. Marbella and the Costa del Sol is one of them. It's the California of Europe, so it probably has its own forces, its own supply and demand issues. Whereas you go into maybe a more kind of resident local market in Malaga or Granada or Seville, and the conditions are completely different because you've got a different profile of buyer. It's more domestic. It's probably lower end, and obviously there are different pressure points on those types of buyers than there are on the wealthy. Let's be absolutely honest. We're living in a capitalist society, and sometimes when there are headwinds against us economically, the rich get rich and the richer and the poor get poorer. That tends to be how it works. So it's interesting to hear these figures and to get these figures. I think they can be interpreted in lots of different ways. What I think the important message from me, and this isn't fictitious, is that the market is still moving apace here. We're noticing in terms of pricing, we're noticing a little drop in some instances. I'm not seeing alerts for properties with a price increase. I'm seeing just a few dropping off, maybe from the post-COVID kind of boom period when everyone got a little bit excited about the market and the pricing. We're noticing it's just coming down to a more natural level. But then, of course, I was having this debate with a client this morning. Of course, when you're talking about a specific area like Marbella's Golden Mile or anything beachfront on the Costa del Sol, they're not making any more beach. So it means that the value of the stock in certain areas is always likely to be very buoyant because there's a minimal amount of supply and a lot of demand for those areas. So, this is where it's fascinating because there are literally so many little micro elements going on within all these markets. And this is where I think it's great to have the figures. It's great to have the national figures and then the regional figures because they give you an idea of what's going on. But I think when you're dealing with predominantly a second home market, as we are in Marbella, and a sort of micro market, as in the California of Europe, it's very hard to interpret those general figures for this market.
Yeah, no, absolutely. There's some areas where the figures, the national figures, the overall story is more relevant because they're more plugged into the national story. But like you say, Marbella is not. It's like a bubble, and it has its own dynamics. And you have a lot of even in a recession or a downturn, if you have very diversified international demand, there's just more buyers around than other markets and other segments, and they're cash buyers. They're not so reliant on mortgage financing. So yeah, in Marbella, you really have your own little world, and that's great. It makes it certainly more insulated, and insured against. Although it was, let's be honest, when the big crash happened of 2007, 8, 9, and it kind of bottomed out into there were some fantastic opportunities in that because even though Marbella hadn't changed, there was a sense of, Spanish real estate is all toxic now. Just don't go near it. It doesn't matter. And there were fantastic opportunities in Marbella, and also people who had borrowed too much and were in difficulty and had to, they were in distress, and they had to, even wealthy people, because it was quite a unique situation. But doesn't look like there's certainly we're nowhere near that today for a bunch of reasons. I mean, let alone mortgage lending is the criteria and the credit requirements. The banks are very, very careful who they lend to, and getting more careful, by the way, because this government's putting all sorts of conditions on the banks. And they have to, the hard left coalition, junior partner in the coalition, they're trying to force the banks. Well, they've made it a proposal which has been rebuffed by their socialists, but to try and make all variable rate mortgages fixed, which is just like bailing out. It's rewarding variable rate borrowers at the expense of fixed borrowers and lenders, and it's a moral hazard on a massive scale. But anyway, it's not being entertained in this case. We have to talk about the housing law maybe in the next discussion, because although it doesn't have much relevance, I don't think, to Marbella and to the foreign market, it does have a broader way it's going to kind of impact the housing sector in Spain. Anyway, to get back to the mortgage and the fact that this time round there's no lending is much more reduced. House building is extremely reduced still. We're nowhere near bubble territory, so there won't be the kind of opportunities.
I bought property in the when the problems came in 2007, 2008. I saw an opportunity. I bought some property, but I've also bought property in the last 12 months here in the Costa del Sol, because I sensed an opportunity with a couple of little things, purely from an investment point of view. And I think what's encouraging for me with regards to the indebtedness is that banks, as you said, are much more ruthless, if you like, in terms of their qualification procedure, the amount of information required before they offer to lend their money. And also, what's interesting is the fact that the fixed rate market is what's 66% of the market, and that's reassuring, I think, because if anyone's looking for evidence of bubble territory and boom and bust and stuff like that, I think that's good to see, because it means that people can manage their cash flow. Because as you said, the problem is, and even for the wealthy, the problem would be if their mortgage rate increased by 2,000 a month, then all of a sudden that does impact on your household income and expenditure patterns, and then you see a glut of properties returning to the market for sale, and then you see the imbalance of supply and demand, and then you end up in a different market. I think we're seeing very different things, and I think it's a very different scenario when you look at the number of mortgages granted in the last 12 months compared to pre-pandemic levels, and also, especially compared to 2006, when there were like 3 times as many mortgages. That's encouraging. When people are looking for evidence of the market being a stable market, I see that as an encouraging piece of news, really, and particularly with the way that mortgages are structured now in terms of the qualification, and also the fact that fixed rates are certainly the choice and recommendation of most banks. Then that's good. That's good, because it should mean that no one's going to get a nasty shock.
Yeah, absolutely. No, that's all very positive. And but nevertheless, most people need mortgage financing to purchase, not in Marbella and not if they're Belgian, but most Spaniards and a lot of people. But also, it's been rational to buy with a mortgage when you can get long-term fixed interest rates at close to 2%. It's been absolutely rational to take as much credit, get as much credit, borrowed money as you can, even if you don't need it, just because money's basically inflation's at we've been near 10%. So you're being it's a gift.
And also, mortgages are still cheap. I remember,
amazingly cheap.
I'm old enough to remember the bad old days of 15, 20% interest rates.
Mm-hmm.
Now we're at 3.5%, 4%, something like that.
Yeah,
on average.
Yeah.
I mean, that's probably where it should be, because what it means, even if you have the cash, is actually, if you can make more than 4% elsewhere with your savings, then why not take advantage of a mortgage? You're going to be effectively, cash flowing yourself. So the people that I speak to, kind of in the know, in the finance game, they say, look, Sean, mortgages are still cheap money. It's just that we've got so used to it being almost free money that we're now bulking at it, and actually it's still a pretty good deal.
Yeah, by historical standards, money is still very cheap today. Yeah. I mean, I think it's different in the US, but in Spain and in the Eurozone, you can still buy, you can still borrow. I mean, I don't know, because I just see the average figures, but they're pretty low. I don't know what the reality. What are your most recent? Do you know, in recent examples of clients of yours who've taken them, or what kind of a rate did they get?
It varies from client to client, and their affordability and all those sorts of things. But they're still, I haven't got the data to hand, but they're still getting good deals. Because what we tend to do with most of our clients is and this is for another debate. But what we tend to do with most of our clients is we introduce them to a broker, a specialist broker, who can help them find the lender for them. Because not every lender is the same. There are some Spanish banks that are very traditional. They won't think outside the box, and there are others who will. So when I applied for my mortgage, I think we put the application into 3 or 4 different banks, and honestly, I think 2 rejected me because I was self-employed, and then the other 2, it was a wildly different offer. So I think it always pays to pay that little bit extra to a broker rather than just approach your bank who you've dealt with for years. There's somebody down the road probably with a better deal for you. Yeah, as long as the paperwork stacks up and the figures stack up in terms of your eligibility, then what a lot of brokers do now is they put your case forward to 2 or 3 companies and get the companies, the banks, to fight for the business, which is actually quite interesting. And you've got to remember that, although people want mortgages, the banks want to lend money as well. This is how they make money. So they want, they have targets as well to lend to people. So it's again time for another debate on this, but it's an interesting dynamic going on in the mortgage market.
No, absolutely. So you would recommend, in terms of tips, what would you recommend if you want to buy? It's still cheap to get if you can get a mortgage, if you've got a good credit score and you want to take advantage of that, and you're going to buy a property in Spain with prices what they are. If you don't, like you say, the Belgians, they're just hostile to the idea of getting into debt. But people who are not, that debt averse, and you want to take advantages of still cheap money, what's the best way to go about it if you're buying property?
I would speak to your agent and find out if they have any introductions to local mortgage brokers who can speak your language and who can sit down with you, or they can do a Zoom with you as we're doing and talk about the finances. And my advice to clients is be honest. Don't keep those skeletons in the closet. If you've got 15 different loans for 15 different cars that you've got on your driveway, you need to come clean, because the banks are going to see it. The banks are going to want pay slips. They're going to want bank statements. They're going to want a credit report. So they will see these loans. They're not stupid. They will see this debt. So be upfront and honest with your broker, because it may be that your broker knows a bank who will be more sympathetic to your needs, and all those 15 car loans, they might look at it in a slightly different way. But I would always use a broker. I did. I'm based here. I know a lot of banks, but I still used a broker and paid their fee. And I got at the time it felt like a good deal. With the market being a little bit heated at the moment, people are competing for properties. And if you're not in a position to act decisively and quickly on a property that you fall in love with, you're going to lose that property to someone who's in a better position than you. This happened to me as well. I was slightly behind the market. I didn't have all my ducks in a row, and people were beating me to properties because they were cash buyers or they were mortgage approved, ready to go. So my advice to people would be invest that time speaking to an expert, find out how much you can afford. Because until you do speak to someone, you really don't know, in terms of how much a bank will lend. And then you can go into the market knowing that you've got agreement in principle, you've got probably some cash in the bank for a deposit. And if you see something that you love and you've got 2 or 3 other buyers in the frame as well, at least you're in pole position. You can go, bang, yes, I want it. And honestly, from personal experience in this market, I've seen that happen to 2 or 3 people recently who just weren't quite ready to commit, and they've lost properties.
Yeah, okay, so it sounds like get your mortgage financing visibility, get that all sorted out so you're not wasting your own time or other people's time. That's one of the first steps to look at. If you're going to use mortgage financing, make that the first thing to try and clarify.
Absolutely. And I also think even if you're not thinking of using a mortgage, just explore the opportunity, because as I say, there might be something more interesting that you can do with your cash that will make you more money than you're paying on the mortgage, and these are, we're getting into investment territory here, which is not my bag, but the fact that we have multimillionaire clients who still use the bank's money says everything you need to know about their view of how cheap finance is at the moment.
Sure. Yeah, absolutely. But also bear in mind that taking out a mortgage, there's pros and cons and you have to weigh them all up. Taking out a mortgage comes with a bunch of costs as well. There's like extra fees, stamp duty, the notary. Everyone likes to charge a fee whenever you do anything. And mortgages come with some costs of that. But if the bigger, once you've taken those into account, and you look, and then, but obviously the most important thing is that the cost of money, not just the transaction cost, but there are transaction costs associated to taking out mortgages as well.
There are, although those have been lessened with this government in power, obviously having a socialist government, they've kind of forced a lot of those costs back onto the banks. Now, you're probably paying for it in a roundabout way anyway, as all consumers end up doing. But the fact is, there's probably never not been, well, there has been a better time to get a mortgage in Spain, but in terms of how easy it is to actually go through the process, get it, and the costs involved, it's probably hasn't been a better time to get a mortgage. And Spain is very kind of user friendly now with mortgages. It used to be that wasn't the case, but now it's competitive. It's right up there in terms of offering the best deals. So yeah, I think it's worth exploring. Even if you're dead set against it, you're sat in Brussels and you're like, no, have a look at it. Have a look at it. It costs you nothing to do the research.
Absolutely. And from time to time, I see comparisons with, say, Portugal. And the impression I get is that the Spanish mortgage market is more transparent and has better deals than, and significantly more in favor of borrowers than the Portuguese market.
I found that as well. And I think it's one of those things, people that, the Spanish always think that Portugal is like the poor relation in terms of infrastructure and ability to do things. And I think it's a little bit true. It's like the UK is behind the US. I think Portugal is a little bit behind Spain in terms of, getting on top of things.
Catching up.
Yeah. And it's true. I mean, it used to be the case here in Spain that you go to the notary's office and people were typing with one finger because the sister was off and she'd just come in to help out. And it's a bit like that in Portugal sometimes as well. I think it's improved. It's improved in Spain, but you can see that Portugal's just a few years kind of behind. So I think that that applies generally when it comes to business and commerce. And I think you're right. I think the Spanish just are a little bit more transparent and a little bit more commercial in their thinking at the moment. Thank you so much, Mark, for making the effort to join me today. I'll let you get back to the sun.
Always a pleasure.
And I will see you next time. Obviously, if anyone has any thoughts, comments, criticisms, whatever, please just email us
or any subjects they would like people would like us to. We've had a few suggestions, and we always do get around to them.
Yes, I know. So if anyone has any ideas, do let us know. Anyway,
very good.
Many thanks. You take care.
Thanks, and Sean. See you next time. Bye.
Bye.